With that, shall we switch to Pepsi? Nice, easy.
Oh, that's not
company.
AI.
That's not AI at all. I bet you they use AI for something, though.
Probably.
So let's talk about Pepsi. Their symbol is PEP. They're in the beverage non-alcoholic industry. And I know they have food as well, but they're in the non-alcoholic beverage industry. Only 1.6% shares on the float side. On the short side, no problem there. 79% institutional owned. PE ratio, 26.1 versus 25.8. We do see a price of sales 2.2 versus 2.8. Price to book value 10.7 versus 5.8. Price to cash flow 16.2. That is better than the industry at 23.6. And you have a PEG ratio going forward of 5.2. That's about 1/4 the industry at 20.1. Now, the earnings for Pepsi, unfortunately, were down 20.3% over the past year. The industry was down 17.5%. Sales for Pepsi down 0.3%. But the industry, and again, non-alcoholic beverages, was down 11.5%. 5-year growth rate for Pepsi, the analysts say 3.3%, not as good as the industry, growth of 5.8%. You get I'm going to say a good dividend from Pepsi. It's 4%. Now, it does show they use 99.8% of their earnings to pay that out. I think as their earnings have dropped a lot. But again, that dividend, I'm going to guess at this point we don't see it being cut. But still a nice dividend of 4%. The balance sheet, you got a current ratio of 0.8 versus 1.4. Not great, but not terrible. Debt to equity is high, 2.8 versus 1.5. Net profit margin for Pepsi, 8.2%, below the industry at 11%. And return on equity is 41 versus 37.5. And here's an important about the dividend. Free cash flow is $7 billion. The industry is at $1.8 billion. So I'm going to say based off of that and some of the things I saw, I'm not concerned about the dividend being cut anytime soon. Chase, you got some news. What else you got there?
Yeah, we'll start with the current price here for PepsiCo. Again, their ticker symbol PEP, $143.53. 52-week range, the low here, $127.60. The high, $179.43. Looking at the last 5 years, I mean, the stock hasn't moved much. It's up about 5%. I mean, you've probably gotten that decent dividend of, we'll call it around 4% over that time frame, but again, not very exciting returns. 10-year return about 55%. So, I mean, you've probably done decent over the last 10 years with the dividend, but again, not setting the world on fire. Going forward for PepsiCo, though, I was a little bit disappointed by this because I was intrigued by the story. I know the stock has kind of languished somewhat, as I said, over the last 5 years, but I still go out to December 2026. Estimated earnings per share here, $8.50, gives us a target sell price of $141.10. Still trading at nearly 17 times those future earnings.
You know, and I'm kind of looking at it as well. And those earnings are pretty tight there. Low estimates 822, the highs 870. But again, I haven't read Pepsi, but other ones I read when I'm looking at other companies, GLP-1s, diet drugs keeps coming up. Pepsi has chips, I think, Fritos, but they do have an active manager coming in. Was Elliott Management, I think, is trying to do some things here.
Yeah, so Elliott, they actually took a $4 billion stake in PepsiCo,
Ooh.
which that is reportedly the hedge fund's largest equity position ever. Wow. And makes it one of PepsiCo's top 5 active investors, excluding those index funds. And it's kind of interesting to read what Elliott said. They said, while unfortunate, this disappointing trajectory has created a historic opportunity with the right mindset and appropriately ambitious turnaround plan. PepsiCo today represents a rare chance to revitalize a leading global enterprise and unlock significant shareholder value. It says despite its strengths, PepsiCo North America has underperformed its peers for more than a decade on both growth and margins. This long-term underperformance stems from several related strategic missteps, including self-inflicted share loss in soda, an underperforming vertically integrated bottling structure, and a proliferation of new brands and SKUs that has strained focus and execution. And what I wanted to emphasize on here is this brand is very complicated. I mean, you have stuff all over the place, right? You know about soda, but then they have chips where they have the Santina's chips. They have, which is like the Mexican chips. They have Tostitos. They have Sun Chips. They have, there's so many brands here. It's hard to scroll through, honestly. They have Muscle Milk. I mean, they have
Muscle Milk. I drink Muscle Milk.
Mountain Dew, Ocean Spray.
Wow.
I mean, Pure Leaf Tea, Rockstar Energy. I mean, it's just Spitz, the sunflower seeds, Soda Stream, Sobe. I mean, Sabra, which is the hummus, I believe. I mean, they have so many different products that I can see what they have. Gatorade, obviously, Fritos, Cheetos, Captain Crunch. I didn't even know they were in cereal.
Cereal,
Jeez,
wow. That's not a good place to be, though.
Bubbly, which is the Michael Bublé used to do that commercial there. I mean,
yeah.
they have stuff all over the place. I think what Elliot is saying is like, you guys need to like focus on something and be good at it. Where right now they're just throwing everything at the wall and, hey, we got some market share here, market share here. And I can see where there's likely opportunities for improved efficiency.
And I think they have Propel as well, and that was one that I liked. But I think you're right. You got so many different brands, you lose focus, and and with again the diet drugs.
Propel, yeah, they have Propel.
With the diet drugs, it's just kind of like people are not going to be eating as many chips and
that's
Fritos.
the thing I'm not sure of is how much of snacks is their company versus soda. But even with GLP-1s, I don't think people drink as much soda. I could be wrong on that, but I'm not sure.
If you're full all the time, you're not going to want a carbonated Pepsi.
Yeah.
So, and Pepsi, I don't drink Pepsi. I don't really drink much soda at all. But
Yeah.
I mean, I'm glad to see they got other things. But I don't know. I want to kind of like it. That's why I saw what's going on with Elliott Management. What's he seeing? It has had a nice rebound, I think, over the last month or two. But it's just. I'm just uncertain right now with the diet drugs. And I think someday there'll be a problem with those. But for now...
and especially given the valuations around 17 times earnings, it's like with the potential headwinds,
Right.
I would want this at a far better value than 17 times earnings. And it's not like PepsiCo is going to grow earnings at 10% a year. So,
Yeah.
I mean, you're overpaying, I think, still for this business with a lot of potential problems.